Good morning and welcome to a brand new year, a brand new day to a new trading week for the beginning of 2023. And I wish all of you will be having a great year ahead. And let's go back and recap what happened in the last week of 2022, what the market did. On Wall Street, we can find that the market actually rebounded. In the last two trading days of 2022, the market actually have a late rally, and that means Santa Claus may be late, but actually it's better late than never. So this upward momentum in the last two trading days of 2022 may actually cause the market to extend higher. There is the risk that the market may even take out the December high. As far as the Dow Jones is concerned, you can see the December high at 34,712. This level may be has the potential, I would say it will. I just say it has the potential of actually coming back to challenge this high. And if it does, then I think it's setting the stage for a very, very possible downturn in US equity markets. So this year, for the first 2 weeks of this year, I still maintain that there's a possibility that the momentum we saw in the last two trading days of 2022 may actually extend into the early part of 2020, in the early part of January 2023. Okay, but this, if it happened, okay, may actually taper off and experience a sudden turnaround in the middle of the month. So do watch out for mid-January from 16th to 23rd of January. Do watch out for this period. I think this is, in my opinion, a very highly dangerous period for people who still maintain a very bullish outlook, because there were already talks, by market commentators saying that the bear market is over, the market is getting ready to rally. It may be so in the first 2 weeks of this month, but anything can change. And if you see a reversal signal in the price chart, take the cue to exit all long position. And for me, I'm going to be looking for an opportunity to short the US equity market, but not in this particular index. The Dow Jones, as we have seen over the last 2 months, has been the firmest in terms of the rebound. So do not sell the strongest, sell the weakest. And the weakest right now is definitely not the Dow Jones. But the Dow Jones will provide us a benchmark as to whether the market has already lost its upside momentum and getting ready to topple over. So do watch out. Okay. Then in the S&P 500 is the middle of the road. You can see the rebound wasn't that great. The whole of December, you can see the most of the trading activity was to the downside, and the rebound was actually quite shallow. If we get a rebound, earlier on I did mention that there's a possibility that in the Dow Jones the market may actually attempt to test the December high, last December high, but that remains to be seen whether it can be done in the S&P 500. If we're going to get a similar move in the S&P 500, this bracket of prices at 4,120 to 4,230 is going to be an area of vulnerability to me. Okay, but again, this is not going to be the market in which I am going to short. Okay, I may take out some light short position if the market ever comes to this kind of prices like 4,120 to 4,235 area. Okay, however, I think I'm going to reserve the bulk of my resources to short the next index, which is the Nasdaq 100. Okay, Nasdaq 100 is by far the weakest of the three major equity index in the States, because at the end of last year, while the Dow Jones closed down just under 9%, the Nasdaq 100 actually closed down 33% in the so you can see the difference between the strength of the US equity markets. The Dow Jones is benefiting from an influx of overseas capital into the United States because of the interest rate differential among the G7 nations. Okay, so long as the Federal Reserve continue to hike rates, US interest rate is likely to stay higher relative to the other G7 nations central banks interest rates. That means we're going to see an constant inflow of capital moving into the United States. And once this capital reaches the United States, there's a very good chance, and we have empirical evidence to that have already surfaced, that most of the funds, or at least a good part of those funds, are parked in blue chips in the US. So that means if the market ever have a turnaround, the Dow Jones is definitely not where you want to be shorting. Okay, you want to short the other markets, and we have seen last year the worst performing stocks, those in the tech stock space. Okay, and we have seen how tech stocks has basically been decimated last year, and I think this onslaught of lower valuation will continue into this year. So I will still given the preference, I will still be looking to sell the Nasdaq 100. Okay, so if we get a similar rebound to test the December high, I hope that happen in the Nasdaq 100, because if the market can go back to test the December 100, the December high, that means it's giving me an even better price, okay, to anchor in my short for at least the medium term. Okay, so if a market turnaround happens, how long would it last? I would think it will last all the way into the first quarter of this year. That means somewhere in the period between March and April. So it could be a very long ride down. Okay, so how far it will go, I will have no idea. But basically, the one good price level in which to actually gauge, okay, will be the low of 2022. For the Nasdaq 100, that means 10,440. That means this level here may not even hold if the market ever reverse downwards. Okay, so the potential for selling US equities, I think the brightest equity index and the product of choice for me is the Nasdaq 100. So I'm waiting eagerly for the market to rebound. Okay, in the meantime, if there's a chance to buy, would I buy? If I want to buy it, definitely I will be buying the Nasdaq 100. Like I said, the Dow Jones is the strongest, and if I ever decided I want to take advantage of the temporary extension of the rebound from the last 2 days of 2022, then maybe the weapon of choice, or I won't say a weapon of choice, I'll say the product of choice will be the Dow Jones. So if I want to buy, I'll be buying the Dow Jones. If I want to sell, I'll be selling the Nasdaq 100. Now, there is another index you can consider. This index is called the Russell 2000, which is a small cap index. Now this is the daily time frame. You can see that while all the three major equity markets, the Dow Jones, the S&P 500, and the Nasdaq 100, they all bottoms out in October last year. However, the Russell actually bottoms out much earlier, okay, in June of last year. And then as the market tried to go down in October, this low in October did not take out the June low in the Russell 2000, creating what we call a double bottom, okay? So if this is the case, the market could actually rebound in a three-wave rally all the way into this bracket of prices to even challenge the August high. So the structure is a little bit different, okay? It's a little bit different for the Russell 2000, okay, compared to the other three equity index. So this bracket of prices, I think the market, if it can come to 2000, is offering another chance to go and sell short. You can see this near-term support line here. If the market goes up, cannot go significantly beyond this support and resistance line, I think this is a cluster of area to look out for selling signal. Okay, so this is another index you can consider other than the Nasdaq 100. Okay, now let's go into Hang Seng. The Hang Seng this morning, I'm not sure whether there's any update. There's no update for today. Maybe they are observing the National Day, the New Year's Day. So for some reason I do not have update. It's already midday, so maybe I won't get any update today. That means if the Hang Seng, based on the idea that the Wall Street may actually rebound to test the December high, that means to say that market actually in Hang Seng in Hong Kong actually closed very near to the December high. Okay, so to break the December high is not an issue. I think the issue here will be this level of prices, 22,500 levels. Okay, 22,500 represents two double top here. Okay, so if the market can actually extend higher, this will be the area to watch. Okay, so again, watch out for a possible extension of the Hang Seng counter trend rally. Okay, over in the Shanghai Composite Index, again, we have no update for today. No update yet. Okay, we can see that if the Hang Seng is going to be able to hold the line and maybe even rebound to test the August high, that means it has we have every reason to also suspect that the Shanghai Composite Index may actually also rally. Okay, then of course the area in which to watch is this cluster of price at 3,300 levels. Okay, because there were 3 times, okay, in recent last year the market actually attempted this level, 3,308, 3,300 and 3,300, 3,295, and then 3,278. Okay, 3 times the market actually attempt to take out the 3,308 without success. And if we're going to get another rebound, I think this is a cluster of prices to aim for. Okay, whether it can take out the 3,308 remains to be seen, but I think there will be a lot of resistance around there. Okay, similarly, there's this support line that not currently turned resistant. As the market drags on, I think somewhere the intersection between 3,300 is going to be where the resistance is going to come from. It's a very nice round number. Okay, Now, over in the Nikkei 225, again, we do not have any updates so far today. Again, maybe the Japanese market is closed in observance of the New Year Day. So if the market ever rebounds on Wall Street, it will definitely benefit the Nikkei 225 as well, because I think they are mimicking not only the Wall Street, I think they are mimicking the Nasdaq 100. So if there's a case, the entire sentiment in this market is actually quite bearish. So let the market tell us what it wants to do. So far, we can see the November high couldn't take out a September high. Maybe if the market rebound, this area of prices between 28,500 to 28,700 is going to be the barrier to higher prices. So do watch out for this barrier, this range of prices. Now over in FX, dollar, okay, maybe I'll show you the 4 hours time frame. You can see the dollar actually rebounded relatively strong, okay, when it hit 130.57 on the 21st of December, okay, 4 days before Christmas. Market actually attempt to go under. Remember, I've been mentioning this level 130.39, okay, at least on my chart is 130.39. If the market breaks below 130.39, the entire bull market in dollar yen, starting from the low of March 2020, is likely to be over, is considered to be over, and I would have to take it with a pinch of salt, saying that temporarily, okay, the dollar has lost its momentum to the upside and getting ready to retrace back, okay. But over a longer term, when we look at the fundamental behind why the dollar yen has been so weak last year, it's because of the interest rate differential between the BOJ interest rates and the Federal Reserve interest rates. Okay, in Japan, interest rate is still negative 0.1, whereas the Federal Reserve has been hiking interest rate very aggressively to the point where the Fed fund rate is now currently being quoted between 4.25% to 4.5%. So between negative 0.1 to 4.25%, the difference is so great. There is the inevitability in which the currency in Japan is going to lose value relative to the dollar. So over the long term, we're going to see this play out again. And then towards the closing days of 2022, the Bank of Japan Governor Kuroda actually threw a curveball into the market by expanding the the yield on JGB, which is Japanese government bonds, from 0.5%, 0.25% to 0.5%. What this means is, he said he's allowing interest rates, the yield on JGB to go up, okay? But what he's not acknowledging is, in fact, giving up, okay, trying to suppress the artificial cap on Japanese bond market, okay? So the yield is going up because the pressure is too great, because in order to hold the bond yields below 0.25%, okay, that means the Bank of Japan have to continuously spend a lot of money just to buy up the bond market, because they work in opposite direction, right? So if the bond price, the JGB do not fall, okay, then prices, the yield on JGB cannot go up. So they have to spend a lot of money just to hold the Japanese bond market, and it's a very expensive exercise, okay? So I think towards the end of the 2022, I think he gave up and allowed the yield on JGB to go up, okay? And it has been touching the upper band of 0.5%. That means it is a losing battle. Based on this, over the longer term, I still think the Japanese yen is going to continue to fall relative to the dollar. So as the market breaks, it looks like it may break this time, because this morning we see a low at 130.77. And this is the first day of trading for this year. If the market goes lower to 130.39 on my chart, that means I will have to eliminate the daily time frames bullishness in the dollar yen and allow the market to find a new level. And I still want to buy dollar versus the yen over the medium to long term. So I will have to allow the market to tell me at what point it stabilizes and getting ready for another leg of rise. Okay, so do watch out for this move. Do not sell this dollar yen, because the fundamentals is not in favor of lower dollar versus the yen. Okay. Over in the sterling is struggling for the good part of December. You can see that first it clustered around this level, then it clustered at just above 120 levels, and the upside is 120, 120. So it looks like the market is going to be compressed within this level. If the market ever breaks 120, 120, it's likely to be capped around 120, 160 to 122.20 level. So between this 60 pip range, I think the market will see the returns of selling interest, and that may cause the price to go back down again. My target all the while has been at 119 to 118. So between these two prices here, I think the market may find a level to stabilize. Okay, so do watch out for this move here. Over in euro versus the dollar, It has been a lot firmer than I expected. I actually tried to sell this currency pair without success, and I actually threw in the towel, exit with a small loss, and just stand aside because it was going towards the end of 2022. I didn't want to get caught. So good for me, because this morning we saw price went up to 107. 107.13 is the high for this morning. And based on risk reward ratio, I think current price is actually very conducive to do counter trade. Market has been going up, and to do counter trade means to sell. Okay, if I do see a reversal signal in a lower time frame, for example the 60 minutes, I may take a chance to sell this euro versus the dollar and put my stop just above the 108 level. Okay, and I want to exchange this potential risk area for the possibility that market can go all the way down to 102. Okay, and this is a great risk reward trade setup. Okay, if the market actually breaks this near-term support line, it gives me the confirmation that I need. Okay, then the market may actually be going down to 102.30 or 40 levels. Okay, so this is my target. Over in the Aussie, we can still see the Aussie has been managed to hold on to its line. Market has a drop from 0.69, go all the way to 0.6630, and then rebound to 0.6820 this morning. So how much more can it go? Again, you have to have a view on gold market to decide if it's going to be opportune to go back into the Aussie market. Now, the outlook for gold right now has been very firm, but there's a danger that it may actually lose some steam and come back down. So if gold actually pulls back, it may also pull back the value of the Aussie. So if it's accompanied by a break of this near-term support line, then it gives me the confirmation that I need, that the market may be going down to test the 0.6, the 66 cents. But again, you can see that the risk reward is not fantastic here. Even if the market actually pulls and breaks down below this support line, I'm not going to sell, because the risk reward does not make sense. Okay, so I will probably give this pair of currency a white breath and look at somewhere else. Okay, over in dollar versus Canadian. Again, if you want to do this currency pair, do watch out for crude oil prices. If crude oil closed last Friday on a very firm note, in fact, it closed above $80 per barrel. So if the crude oil prices is firm, it means the Canadian dollar should be firm. And in this case, the dollar need to come down relative to the Canadian dollars. But however, the top side in crude oil is quite limited. Maybe there's another $2 more to go before it actually hit a ceiling. So if that is the case, if crude oil pulls back, okay, the Canadian dollars will also lose value. That means the dollar versus the Canadian dollars may actually go up. So again, this is not the best of currency pair to do a trade, because it's right now smack in between the December high and low range. Okay, so it's like it can go either way. So I'm not going to take a trade on dollar CAD for now. Okay, because like I said, it's a 50-50 right now. So it's not very great in terms of risk reward ratio. Okay. So over in crude oil, like I mentioned, the price actually closed above $80 per barrel. In fact, in the futures contract on NYMEX itself, the market actually closed at $80.51. And it does look like the market is still trading within this narrow price channel here. And there's also this support turn resistance line. If the market goes into this bracket of prices, remember this is a three-wave bound. Earlier on, I was actually long crude oil, okay, and I actually exit at $81, and then the market pulls back out. As the market goes down, I went back in the market to buy at $87.10, okay, and now the prices is above $80. But I do not expect the market to run away. There's a possibility this higher may not even be exceeded. Even if it's exceeded, it may not run away. So the top side is actually quite limited. I'm more than happy to exit at $83. So I'm placing my exit level at $82.95. And if this level get filled, I'm waiting for another pullback. So another pullback may actually come back and test the $76 range. Okay, so again, we have to watch how this market actually develop here. But top side is actually quite limited. But over the long run, I think there is a great potential. Every pullback is a buy for me. Okay. Let's look at the gold market. The gold market appears to be very firm. Last month high was $1,833.30. It pulls back and then held at this support line here, and then rally back to $1,826 this morning. Now, based on risk reward ratio, if you believe the market here may be losing momentum, you can draw a very, very steep support line here. basically. Okay, so if you are doing the lower time frame, this support line here may be quite meaningful because it's 45 degrees. I know, slightly more. Yeah, it's 45 degrees. So if the market actually breaks this near-term support line and then break this secondary support line, it set the stage for further decline. I hope the market can go down all the way to 1,725, maybe even $30. So that will be my target for now. So is it going to happen? Not sure. I hope it does, because if it does, then I want to be buying gold rather than sell gold. So is it good to sell? Maybe. If you look at the risk reward ratio, if the price do not exit significantly above $1,835, I want to sell this and hope the market will actually break this to support line, going all the way first to test the December low and ultimately this bottom here at 1,725. Okay, so this is setting the stage. If the market ever pulls back that deeply, it is setting the stage for another buying opportunity. Now, if I'm going to be doing anything on the gold market in terms of short, I'm not going to do it on the silver market, because between the two, silver and gold, silver seems to be the more stable. Okay, so if silver is a lot more stable than gold, that means the downside is actually quite limited. I will take the Q for silver based on the price action in gold market. If we see a breakdown in gold prices all the way to $1,725, the moment it hit those levels in the gold market, I'm going to look at the silver market, looking for corresponding buying signal. And if that's the case, I would rather buy silver than buy gold over the long term. If I have to choose between the two, maybe I will buy silver. But if I have more than enough resources, then I will do both. Okay. But for those with limited capital account size, if you pick one or two, okay, one of the two, then I think your bets will be higher in the silver market. Let's take a look at the crypto market. Crypto market remains to sideline, going into still looking for direction. There's no incentive to push the price either way. So the market currently on Bitcoin is hovering just above the 16,500 levels. Okay, will it go up? Possible. Will it go down? Also possible. So there is no firm view on the crypto market. Overall, over the longer term, I do believe crypto markets, especially Bitcoin, needs to go down a lot lower. Okay, how low? Maybe $10,000. Okay, so there's a lot of people saying 12,000. Some people say 10,000. I'm as pessimistic as maybe even 6,000 to 8,000. Okay, so there's a lot of room to the downside. So for a time being, maybe it's not the best time to get back into the crypto space. Okay, Ethereum is also just hanging on for dear life. Recently it has actually held at $1,182 or $83, and now basically just moving sideways. There's no incentive. If the market actually rally, top side potential is only capped. It's likely to be $1,265 to $1,290. So upside is not that fantastic. Okay. The one big move that happened this morning is this one. This is Ripple. Ripple, for some reason, was massively sold off to just above 30 cents. Okay, just below 30 cents. Now, what it creates is, after this big drop, we have this 4 hours time frame. This 4 hours time frame, we see a classical reversal signal, leaving a very long wick at the bottom. Now, if the price exceed the high of this bar here, which is 0.34, then the market is set to go higher. Okay, so if the market did not go after it break 0.3395, for example, and market pulls back, the 50% mark is actually a very good place to actually look for buying positions. Okay, so assuming this is where the market is. Okay, now let's say I do a 50% retracement. I do a 50% retracement here. Okay, if the market ever pulls back the 32 cents after this counter trend rally, okay, so if the market has dropped to just under 30 cents and then breaks the high at 34 cents and then come back down again, then I think at 32 cents is where I think it's a very good area to position long. Okay, because this is technically a counter trend trade. How far will it go? I think maybe it will test the upper end of this sloping resistance line. It could be anywhere near 36 cents. Okay, so from a risk reward ratio, if you have the risk appetite, putting a stop just below the morning low at 0.29997 and exchange for the potential for the market to go and test this sloping resistance line, that could be a potential here. Okay, so other than that, there's nothing to be excited over in the crypto space. We can see that nothing actually happens. You see, market basically is having no incentive to go either way. Okay, this is Binance coin. Obviously, there's no interest here, and there's also no much interest in the Doge coins. Okay, and we also see something not very fantastic in the Cardano. So basically, the whole crypto space is quiet. The only thing that possibly you can do is in the repo market. Not sure what caused the market to sell off to just 30 cents this morning, but we can see that the market has actually pulled back up quite significantly. Okay, so if that's the case, go with the flow. Okay. All right, guys, this is all I have for you for the beginning of 2023. And hopefully over the next few days, we can see some more market activity picking up because the volume is definitely not here yet. Volume may actually pick up some or go back to normal somewhere in the middle of the week. Okay, so until then, continue to watch out for violent moves such as what we are seeing in the repo market. Okay, guys, I'll see you tomorrow. In the meantime, I wish that 2023 is going to be a great year for all of us. And I'm definitely rubbing my hands because a lot of things going to happen in this year. Okay, guys, be safe. And I'll see you tomorrow morning. Bye-bye.